Have you ever wondered how businesses keep track of customers who haven't paid yet, and how they know which unpaid invoices are becoming a problem? That's where accounts receivable aging comes in. Accounts receivable aging is a method businesses use to organize unpaid customer invoices based on how long they've been overdue. In simple terms, it shows who owes money and how late they are in paying it. Think of it like a countdown timer for unpaid invoices. Now, why is this important? Because not all unpaid invoices carry the same level of risk. An invoice that's 5 days late is very different from one that's 120 days overdue. The longer a payment remains unpaid, the less likely the business may be to collect it. That's why businesses create something called an aging report. This report groups unpaid invoices into time categories such as 0 to 30 days, 31 to 60 days, 61 to 90 days, and over 90 days overdue. Let's look at a simple example. Imagine a company has £5,000 owed within 30 days, £2,000 overdue by 60 days, and £1,000 overdue by more than 90 days. Straight away, management can see which customers are becoming higher risk. Now, how is this useful? First, it improves cash flow management. Businesses can identify overdue accounts early and follow up before the problem grows. Second, it helps estimate bad debts. If invoices stay unpaid for too long, the company may need to assume some customers will never pay. Third, it helps evaluate customer reliability. Businesses may tighten credit terms or stop offering credit to customers with poor payment history. Now, let's briefly talk about calculation. The process itself is simple. Businesses compare the invoice date to the current date and calculate how many days the invoice has remained unpaid. The invoice is then placed into the correct aging category. That's the foundation of the aging system. A common misunderstanding is thinking accounts receivable aging is only about debt collection. It's not. It's also a financial planning tool that helps businesses predict future cash flow and manage risk. Another misconception is that all overdue invoices are equally dangerous. In reality, the older the invoice becomes, the greater the collection risk usually is. So, what's the key takeaway? Accounts receivable aging is a system that tracks unpaid customer invoices based on how overdue they are. It helps businesses manage cash flow, monitor payment risk, and identify potential bad debts early. And once you understand accounts receivable aging, you start to see how businesses don't just track sales, they track how likely they are to actually receive the money.